Hello children, welcome to the digital classes of Christ Church Convent Higher Secondary School Gadarwara. I am Amit Toshniwal, your accounts teacher. This video is for class 11th, subject is accounts, chapter number 11, depreciation part 2. Children, in this video we shall learn first method of finding depreciation. Actually, there are 14 methods of finding depreciation, but in your syllabus there are two methods: fixed installment method and diminishing balance method. So in this video we'll discuss about fixed installment method. Fixed, it means the amount of depreciation is fixed every year, it does not change. Got my point? The first word is only having the meaning of this method. The amount of depreciation does not change every year, it remains same. So how to find out depreciation? So in the earlier video I taught you that depreciation is charged on fixed assets, and it is charged on the book value, and book value includes the cost of purchase, transportation, any freight or installation charges. So adding all these overheads, what actual cost comes, that is considered book value or cost price, on which depreciation is charged. Okay, so in this depreciation, its amount will remain same for every year by the means till the end of machine. So you can see the characteristics which are derived from its meaning. First, depreciation is always calculated on the original cost. Second, amount of depreciation is same in all years. Third, asset decreases by the same amount of every year. Fourth, rate of depreciation remains same in this method for every year. Balance of the asset at the end of its life is either zero or equal to scrap value. स्क्रैप वैल्यू मीन्स रेसिडुअल वैल्यू, कबाड़. कुछ भी ख़राब हो जाएगा तो उसका जो भी कबाड़ बचेगा, भंगार, रद्दी, वो कुछ तो बिकेगा, कितने में तो बिकेगा, तो दैट इज़ कॉल्ड स्क्रैप वैल्यू और रेसिडुअल वैल्यू. एंड दिस मेथड इज़ नॉट अप्रूव्ड फॉर टैक्स पर्पसेस. Actually, diminishing method is approved for tax purposes, for which we will talk in later videos. There are some names of this method. This method has got some other names. First, fixed installment method. Second, इसको ओरिजिनल कॉस्ट मेथड भी कहते हैं. थर्ड, इस मेथड को स्ट्रेट लाइन मेथड के नाम से भी जाना जाता है. Fourth, equal installment method, because depreciation is equal in all the years. And fifth, simple method of depreciation, because you need not to calculate, means calculations are easy, not complex one. That's why this is simple method of depreciation. Now we shall learn the formula method of finding depreciation in simple depreciation method, that is fixed installment method, and for which you need to require three things. First, the actual cost or the original cost of the assets, its scrap value, and estimated life. So formula for depreciation is original cost of the asset minus scrap value upon estimated life. So this is formula to find out annual depreciation. You remember this? If machine or any asset is purchased in the middle of the year, then depreciation will be charged for that much time for which machine was in used. I mean to say, if machine is purchased in the month of July, then depreciation will be charged from July to December if accounting period is ending on 31st December. Do you get me? I'm repeating it again. If machine is purchased on 1st April, then from 1st April to 31st December, the total period of time is 9 months. So depreciation will not be charged for 12 months. That will be charged only for 9 months because machine was in use for 9 months. So this point has to note and you have to keep in mind while solving numerical problems. We'll see today. You see the illustration. First, the cost of machine is 20,000 and its estimated life is 10. But having no scrap value, it means उससे कुछ भी नहीं मिला बेचने से, having nothing. So it is not required that each and every time an asset will have a scrap value. Sometimes it will not be in use and it cannot generate any scrap value. So when scrap value is nothing, it will considered 0. So we will apply a formula: original cost minus scrap value upon estimated life. Original cost is rupees 20,000 minus scrap value is 0 and estimated life is 10. So 20,000 divided by 10, it comes to rupees 2,000. That is annual depreciation amount. Okay. In second question, the means B1, B of illustration 1. Machinery was purchased on January 1st, 2016. Its cost was 10,000 and scrap value was 1150 and estimated life is 3 years. So again we'll apply the same formula: 10,000 minus 1150 upon 3. So it comes to rupees 2,950 per year, yani annual depreciation. You see another example. Machine was purchased, it has got estimated life of 16 years, was purchased for rupees 18,000 and cost of installation is rupees 2,000. So as I said that all the overhead charges including transportation, freight, installation, etc. should be added to the cost of purchase to get the actual cost. Okay, so 18,000 plus 2,000, so that will become 20,000 and its residual value or scrap value is 4,000. That will be subtracted from 20,000. It comes to 16,000. When divided by 16, you will get rupees 1,000 per annum and it is the amount of annual depreciation. Now you might be given the rate of interest. It's not necessary that every time you are given the cost of purchase and scrap value and estimated life. No, depreciation can be found out by using percentage method. So this is the percentage method. When you are given percentage, so we'll apply formula: original cost multiply rate of depreciation upon 100. But you just note it down that when machine is not in use for the whole year, then you will have to mend this formula in such a way. You can write after hearing me: cost of asset sold multiply rate upon 100 multiply number of months upon 12. I mean to say, if machine is used for 6 months, then you add to this formula multiply 6 upon 12. If machine is used for 9 months, then multiply 9 upon 12. So that will be done. Okay, so this is formula for percentage method. Now we'll talk about some important thing, and this is very important and very useful for all the numerical question you will solve in this chapter. You might be given with rate, with percentage, you might be given per annum word, or it may be without per annum. So when per annum word is added after the percentage, then you will charge depreciation for the period machine or the asset is in use. Remember me. Remember my point. Depreciation will not be charged for the full year if any rate percent is having per annum word or annually. If such word is added to this, then depreciation will be charged only for that much period of time for which it was in use. And when it is without per annum, and if it is purchased in the mid-year, then no depreciation is charged in the year of sale, no matter when the asset is sold. And if it is purchased in the middle of the year, then depreciation will be charged for the whole year. Again I am repeating, when there is no word per annum or annual, annually, such type of words are not added with rate percent, then doesn't matter when the machine was purchased, depreciation will be charged for the whole year. But in case of sale, zero depreciation will be charged. I mean to say, no depreciation will be charged. Okay, so learn these points thoroughly from your book also after hearing this from my video. Then we will move towards next method and some more numericals in next videos. Thank you.